Okay, so we have been able to populate our purchase information, our actual tax that we have paid. We have been able to populate the sales information and then any other information that's been required. We have gone into our bank statement, pick all the information, and then updated our bank reconciliation data. We have done all these things. So the system has done all the calculation for us. So what we need to do is that we need to be able to download the various reports and see what the system got for us. So we come to our VAT health check report and look at the various reports that the system has for us. So when we come in here, go to click the drop down, and we have a lot of reports that we can. The information that one upload that you did, these are separate different reports that the system is giving you. So we can go to purchase. Let me look at this particular one. This report is on all the purchases that you did. Your input tax, your communication service tax, all the purchases, your import goods, I mean, you have all this information. A very detailed report for you that you can have on your file and be able to do a quick analytics. Then let's look at a next report that it gives us the bank reconciliation. Okay, that's revenue reconciliation bank statement. We did one particular work that we updated the system with our total credit for the year. Then we look at our loans, our shareholders contribution, the reversal and wrong credit. Look at inflow that were on behalf of others. We also look at reimbursable costs that have been paid to us and any other costs that are not revenue. Okay, so we consider all these things. The system has been able to do a reconciliation to tease out how much of the credit that we have on our bank statement, how much of it does not relate to revenue for this particular year, and it has done it in giving us the number. And we can look at it, also go further to look at the receivable that we had from the prior year, how much of it has been received in the current year. Receivable in the prior year, how much of it has been received in the current year. So when you do that, it's able to give us our current year sales, and then we can take out our closing receivables. When you take out our closing receivables, then it should give us a certain number, a certain amount that it should have been able to reconcile with the figure we have over here. If it doesn't, then the system determines how much you have under or over declared your revenue for VAT purposes. And for this particular one, the amount is 655,000 Ghana cedis. So we have under declared our sales, our revenue for VAT purposes by 655,000. This amount is going to be added to our VAT assessment and assess you on VAT. Then, since it's a revenue related item, it will add to your profit again. Then it will assess you for corporate income tax as well. So let's look at the next report. Another report that we are able to get. VAT revenue, annual revenue and VAT assessment. So this assesses your annual revenue that you reported, you prepared, you put in your financial statement. It takes out all your discounts. Then the under declaration that you did, when we did the bank statement reconciliation, it brings it up here. Then also it also looks at our VAT returns compared to our financial statement. If the revenue per financial statement is higher than the revenue per the VAT returns, it means that we underdeclared revenue for the purpose of VAT returns. Then it will add everything back to it and assess you for VAT on this. So the system goes back and do a reconciliation, determine how much of revenue that you ought to have paid VAT on, then compares to how much that you actually paid VAT on. Then the difference is your under declaration. The system is going to do calculation of the VAT on it for you. So it determines the levy. Please, the levy here includes the communication or the tourism levy, depending on the industry selected. This one we selected communication industry. In this case, this levy over here includes communication. Down there, it will do a split for us to see how much goes to standard, how much go to flat, how much go to communication. So it determines it and then compares it with your input. So this is the total input tax that we have. It's taking it out from the output that we got and then giving us an amount of tax VAT payable. So this amount, it compares it with the amount that we actually paid. That's why we populated our tax payment, VAT payment. So amount that we actually paid for the year, and the difference is our underpayment. And interest is going to be calculated on it. It does the same thing for flat rate, it does the same thing for communication service, and then the levies, it does the same thing. All these are going to move and populate our liability summary sheet. So let's go and look at our liability summary sheet. Before that, let's look at other compliance report that we get. It does compliance report for the communication service, standard VAT, the flat rate. It does it everything. It does all. So it gives us a very comprehensive information. Here it tells us whether we filed return on time or not, and how many days we failed to file on time, and calculates the penalty for us based on the number of days that we did not we filed it late. And then it goes further to do calculation of interest. So let me put a different report that has interest calculation. So let me pick the standard VAT compliance that may have interest. Okay, so it goes on to do calculation of our interest for us. It does calculation of interest. So if you had an amount that you ought to have paid which you did not pay on time, it does calculation of interest. But this is what we have done. We have the understanding that anytime you have a liability and you make a payment, the payment should go and hit the first liability before the next liability. So if you have a liability for February, March, April, May, June, and in September you do a payment and you even selected the June as a payment, our system we have done is that it should go and offset the January liability before, if there's any balance, it will come and use it to offset the February and March and so on. So that it does not leave January liability hanging unpaid and interest being calculated whilst you make a payment in a particular month. So it will offset it. So by the time it gets to the June, if the amount is finished, it means that the June amount remains unpaid, so that interest will be at the current rate. So this is what we do. That's why we have about three types of interest. So we have interest until payment, interest on balance brought forward, interest on at the end of the month. It does all this calculation for us so that we will be able to know our interest. It brings it forward over here for us to know the interest brought forward from each of the months. So this gives you a quite transparent calculation of your interest. Then we look at, having done this, it does the same thing for CST, it does the same thing for VA, the flat rate, it does the same thing for the levies. Then let's look at our summary. Having done all these things, it does the summary. It gives us a fantastic summary of all our liabilities. So putting together the VAT details, it gives us the standard. So we have standard, our total liability, flat, our total liability. That's at the end of the year. The levies, our total liability at the end of the year. It gives us everything. So it gives us for annual tax VAT and also on monthly compliance. So this is how much liability we are incurring on monthly compliance by the end of the year. And it goes on to give us our penalties for flat, levies, and co. Give us all the penalties in here. Then it goes to give us our interest, the various interest that we have incurred for each type of the VAT, and then give us the very subtotal and our total liability. So at the end of the year, we know that this is our liability that we have to pay to the liability that we have to pay to government. So having gotten this liability, then we will go into the report and look at where we faulted. Then we take steps to correct this step. That's why we are doing health check. Health check is just not to know, it's not only for the liability and do nothing. It should identify the liabilities, where the liabilities are coming from. Then you put steps in place to close those gaps. If you have to go and do self-declaration, if you have to go and then talk to GRA and then revise your return, if you are within the period. I mean, look at all these things. This is why we are doing the tax health check. So this is the reports that the tax health check is giving us, the tax audit is giving us. So if you have any challenge, kindly come to us, come to our help and put in your question. Just put in your question. Our system will be able, our support team will be available to give you support. Okay, our support team will be available to give you support. Please, we are waiting for your feedback, and then we will be available to support you so much. Thanks so much for joining us.